Hey everyone! I wanted to address a question I've received from frustrated option traders, and that's what to do on Expiration Friday when a stock is pinning right at the strike price we're long. This can be relatively frustrating for those who don't know how to handle it, but if a trader does know what to do, they're able to scrape a few more bucks out of the trade, and potentially a lot more, depending on the stock. For example, let's say we're long the two XYZ 50 strike price call options, and the stock is pinning right at $50, with only a few hours until they expire. If the stock ends up right at 50, or any price under 50, the options are going to expire worthless, and even if the stock goes over 50 by a little bit, the intrinsic value is going to be small. But there's a way to trade this position to add a little more profit before it's all said and done. So if we're long two XYZ 50 strike call options, if the stock expires over 50, we will be long 200 shares of stock. If XYZ ends up under 50, we will remain flat. What I recommend here, and I always start this on Expiration Friday with just a few hours left in the day, is sell 200 shares of stock once the price reaches about $50.25. If the stock continues to trade up, the options we own will cover our short stock position, and at least we will lock in the $50. In most cases, I find when stocks look like they're going to pin, they often do pin, and the stock will find its way back to $50. If it falls under 50, now the option becomes worthless, but we're still short the 200 shares of XYZ stock we just sold. If the stock trades back down to $49.75, then we can just buy these shares back, locking in a $100 profit. If the stock trades back up to $50.25, then we sell another 200 shares. When it falls back to $49.75, we buy the stock back, locking in another $100. We can keep doing this all day. If the stock ends up running in either direction, we have no risk. Our calls will cover our stock sale on the upside, and our position becomes flat once I buy the stock back on the downside. So if stock was to run in either direction, it would have no effect. Well, the only effect would be if the stock ran on the upside. We would have capped our profits, and that is true. But I usually find stocks more times than not don't do that, but instead hover around the pin price all day long. Just a nice little trick to scrape a little more profit out of a trade. All right, everyone, I hope you enjoyed this video. Be sure to stop by OptionsStrategiesInsider.com and get your free option strategy video tutorial.